NewsNation Now continues. Just a few minutes here, a little over 3 minutes till the closing bell on Wall Street. The market's not moving much today. I mean, it's one of these days before the big decision. We did get some retail sales numbers, so the consumer looked pretty good. What's the Fed going to do tomorrow, though? That is the big question as we bring in Doug Flynn, Flynn Zito Capital Management. Quick on retail sales. The American consumer, Doug, ahead of the Fed. What do you say about us?
The consumer is strong. We keep spending, and whether they're still relying on some of the money that they had set aside during the extra COVID money, although that's gotten thin, people have sort of kept their debt at bay, even though that's creeping up. But we keep spending. They keep finding good things to spend the money on. They are looking for bargains. They're trying to save money, and they're getting a little bit lower in terms of how much they can spend. But that's still going on.
The Fed, it's interesting because they obviously have a decision to make. It's not whether you're going to cut rates, it's how much you're going to cut. And
exactly.
For regular people, it matters, what the rate is on your credit card, your car loan, your house. And also just what the stock market is going to do matters to most people, a lot of people in their 401k. So do you bet on them going big, which would be 0.5 point on their key rate, or quote unquote small, which would be 1/4 point? And what's the reasoning?
Right. The market's pricing in about 2/3 that they're going to go 0.5 point.
Right.
But most economists, the economist studies that we've seen are about 84 to 85% of economists think they're only going to do 1/4 point. So there's a little bit of a disconnect. But the market thinks that the economy is a little bit weaker than most economists think it is. And so it's pricing in that kind of a deeper interest rate cut, not only now, but also by the end of the year. The market's pricing in, the rates are going to be down 1.25%, where most economists think it's just going to be a 1/4
Why
of a
wouldn't you
point
just cut
each
a
of the
half?
3 times.
I was talking to Greg Ip yesterday, writes for the Journal. He's a smart guy, and his basic point, paraphrasing, but his basic point is he thought they should cut by 1/2. Why not just cut the 0.5 point? Because if you figure you went too far, then you don't have to keep cutting. It's not like you're cutting down to zero again. You'd still be okay there, no? Or
They can. If you look at where rates are relative to inflation, they are too high. They need to come down. I think doing 1/4 point doesn't also preclude them from doing 0.5 point in the future as well.
True.
But if you start out the gate, it almost doesn't really matter whether they do 1/4 or 0.5 point. The key is we're beginning to start to cut rates. And that's what you want to see, is that the beginning is happening, whether they do it now or in November or December. I don't think it makes that much of a difference. The big problem with doing 1/2 now is people will get nervous. The market will get nervous, like maybe there's some information we don't have, where maybe the economy's weaker than you expect. So I think that it's probably going to be 1/4 point, with the absolute language that if things further deteriorate or deteriorate fast, they will do 0.5 point. But let's get it going. I think that's the likely scenario.
All right, well, we'll see tomorrow afternoon. Thank you, Doug. As always, Doug Flynn, closing bell here as we hit the top of the hour exactly, 4 o'clock Eastern, and the Dow's going to settle in with just almost no move at all, percentage-wise, down just fractionally. The S&P up fractionally, and the NASDAQ down 0.2%. Big day tomorrow for the Fed as we look at our top stories on NewsNation Now. Thanks so much for watching. Just go to joinnn.com to find NewsNation on your television provider. And don't forget to click the red subscribe button below to get more of NewsNation's fact-driven, unbiased coverage.